Hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver here. Let's talk about some stocks, Forex, and cryptos today. This is a pretty big week. We're going to wrap up Q3 on Wednesday, the 30th, and kick off October with October 1st and 2nd, Thursday, Friday trading this week. We have some U.S. news on Friday for non-farm payroll. If you take a look at the image here, big U.S. presidential debate, round one between Trump and Biden. Whether you are watching it for pure entertainment or watching it to kind of figure out who's going to be the front runner, it's going to be interesting. So possibly some entertainment coming this week with that, or it's a train wreck, but you can't turn away. We'll see what happens. Let's focus on the stocks, the Forex, and cryptos this week. Let's have a good trading week. Last week was awesome. My protest is officially done. Also, I was a part of the Trader Summit online conference from Friday, Saturday, Sunday. Hopefully all of you were able to attend, register. Recordings will be coming once they get them processed, but full weekend, Friday, Saturday, Sunday, 16 different speakers, tons of subject matter, and great presentations by all. So I was really happy to be a part of it. If you checked out my portion on Saturday, I actually had a whole presentation prepared. It just ended up being more of an interview, which was totally fine. And had a lot of fun doing it. So thanks a lot to everyone that was sponsoring the event. Thanks for all the panelists and the speakers who did a fantastic job, and everyone that attended and watched. Hope you enjoyed it and learned a ton. So let's get into the markets here. We understand there's risk in trading. Please and always use trade capital only. If you're following me out there on social media, like this video here, follow me on YouTube, subscribe to my channel, like the video, pass it along. My goal is to provide as much free education as I possibly can. The best way to do it for me is to post on my YouTube channel. I also share it on Instagram with IGTV. You can follow me at pulver.chris. In the Twitter world, at pulverchris. And on Facebook, just look me up, just my name, Chris Pulver. Okay, free education out there with my best trading strategy video series. Keep it seriously simple. And like I said, risk in trading, we know the deal. Let's get into the markets right meow. Right. So just to talk about a little bit of a recap, the reason that I don't have a gnarly beard any longer is because finally got paid on some setups. So I did take some partial profits on a lot of currency pairs. Dollar krone was actually one of them. In my trading room, we were running some robots on this pair, and it paid really nicely. Let's go down to the dollar krone position. This was my system right trader max. It did a fantastic job of grabbing some trades. All I did was turn this thing on to buy only. It had two positions in. They added up to 1900 pips. Closed out those trades. Got back in with the robot with more entries. Closed up two more positions at 1600 pips. Got back in on three positions, closing up for 4000 pips. And another two positions here for 1977. So all in all, the dollar krone, and it wasn't a huge trade size or anything like that, but my total was around 9,500 pips on just the dollar krone. The dollar peso had a really nice run last week with dollar strength. We had some emerging market weakness. We also had some nice trades running on Swiss yen to the downside, Aussie dollar to the downside, Aussie CAD to the downside. So everything that I was protesting for started to pay out nicely. So here's Aussie dollar. And you can see this really nice rising wedge break, and it started to drop very aggressively. I don't think we're necessarily done. I think that what I'm looking for here is we had a high to low, lower high to lower low. As long as we respect this structure and pull back for another lower high to lower low, my target for this Aussie dollar is the base of this rising wedge, also this little pocket breakout area, which puts us around 6,800. If we can get to this area, 6,900, 6,875, 6,850, 6,800 would be fantastic. I'm going to be taking all profits off the table for this Aussie dollar. And truthfully, if we just fall this week, let's say that we drift down here and we leave a couple of these pockets available, I'm honestly interested in buying this area. So as much as I've been waiting for this to turn, waiting for this to pay out to the downside, I like the fact that it's fallen very quickly. And if it continues to fall that way, then I'm going to start looking at building some really small positions and take this back up. And here's what I think. From aggressive trend here to aggressive trend here, we're probably going to have some consolidation on the Aussie dollar. So if we do get this fall into this 6,850, 6,800 zone, and we do so with this area being available for some pockets and inefficiencies and targets, then I'm going to look at buying in this 6,800 level. Probably, if I had to pick a level, 6,800 is kind of my small levels, but I really like this trade right around 6,700, which is this exact candle breakout. So if I could get something to like 6750 to 6700, I would try to take that back up in the near term to where this is broken down from like 72. That hasn't happened yet. I'm still bearish on this pair, so we're looking for one more push down, hopefully this week. We don't have a ton of news this week. Here is the economic calendar for high and medium impact. You can see that high impact is pretty few and far between. We have Lagarde that spoke today for the Eurozone. We have a lot of stuff going on with Brexit as the October 15th deadline looms. European Union and UK, things are not looking fantastic for an agreement, but the pound has been getting stronger. So that really big rush to hurt the pound a couple weeks ago is starting to recover, and the pound's actually been recovering nicely, which we've seen for the last 4 years when we've had headlines and kind of a premature move that is crushing the pound. All of a sudden, the inefficiencies, the targets, the kind of pricing things at ahead of time, and then it starts to like the news cycle starts to normalize, and everything seems to be fine, and the pound just ends up pulling back. So most of what I'm focused on this week news-wise is just non-farm payroll on Friday. I'll be watching the U.S. debate, see if that rattles up the markets at all on Tuesday. Otherwise, it's really not a super important week, but we are wrapping up Q3 and kicking off Q4. One thing I wanted to bring up as well, I have this image right here. The S&P 500 has been a great indicator of presidential elections 3 months out. Now, take a look at this. Let me go ahead and highlight this area. This is where I want you to pay attention, because this is 6 months prior, 3 months prior, and 1 month prior. What this tells us is that the incumbent party wins if the market is positive. The incumbent party loses if the market is negative. So we're out that 3 months. We're in that 3 month window looking to see where Q3 and Q4 are going to kick off. Q3 ends, Q4 kicks off. November 3rd is the election. Take a look at this 1 month prior. Basically, if we go into October and the market continues to sell off, I'm talking about the S&P, the NASDAQ, the Dow Jones, the overall U.S. markets, if they are selling off, then that is the market's way of trying to tell us that Joe Biden might be winning. Okay, 6 months prior, if we go back to where we are 6 months ago, yes, we've had some gains in the market, but for the most part, the S&P is flat. From when we had the high in February to the drop in March to the fight back and then falling back in July and August, we are essentially flat on the S&P, with the NASDAQ narrowly hanging on to some gains for the year. But what's interesting is, so look, if this is the market's way of telling us that if we are flat or negative going into the election, that the incumbent party, historically speaking, for the last 80 years, has lost the election. So if Biden wins, this is the market's way of pricing that in / telling us that that might be who wins the presidential election. However, 1 day after, 1 week after, 1 month after, year end, 6 months later, 1 year later, the markets find a way to still be positive, even if the incumbent party loses. So even if Trump loses and Biden wins, which they've talked about always going to crash the market, what does the market tend to do by the end of the year? Okay, 6 months later, a year later, still tend to be positive. Now, maybe not as positive as the incumbent party winning, as you can see here, 6 months after, 1 year after. The markets certainly like certainty, but still, the markets find a way to continue to grind. So, like I said, putting political opinion aside, coronavirus, social distancing, voter turnout, absentee ballots, all the things that are going to be wild and crazy for this year's election. Plus, you have potentially this, Supreme Court 9th seat getting filled prior to the election in case we do have a contested election, in case we do have Congress and the Supreme Court deciding who actually is president, not the popular vote. Again, something that we might never see, but it's going to be insane. So get ready, buckle up. It's going to be a lot of volatility. That is one thing that I'm actually looking forward to, but I'm also very cautious. Last week when I closed up some positions on Aussie dollar, took some nice cash on Aussie dollar, closed up some positions on Aussie CAD. So let me bring these pairs up here. So Aussie CAD got paid as well, looking for a pullback, looking for another drop to the downside. So let's see if we can fall to the downside. So another, break, maybe a pause right here, and then one more push to the downside. Nice structure in here, nice little breakout area at this yellow box. That's, again, looking for this to fall around 9,200. If we fall to 92, is there room for the Aussie CAD to really balance out way the heck back in here? Sure. But a lot of past resistance right here at 92. So for me to be kind of on the safe side of this trade, I'm going to take some profit at 92, close up this position entirely, And you know, if it drifts a little bit lower, that's totally fine. But I might start looking at closing all of my sell positions and start looking at buying the Aussie CAD around that 9,200 support. So that's not done yet. I hope we have one more push to the downside towards 92. Take some profit there. Another pair that paid out nicely. I did take some partial profits on Euro Swiss. And we're back up towards the highs at 108.30. Let's see if we can close above 108.30. What the heck is holding this pair up? Other than me with my drawing, that's you know, providing all this resistance. I just need to make this disappear so price can break out. Obviously, that's not going to do anything. But I want to see if the daily and weekly candle can close above 108.30. I keep buying this thing at 107.50, taking profit. 107.50, taking profit. 107.50, taking profit. Now, I still have these base positions in because I'm looking for this to get up towards 110 and 110.45. So this is another one. Although I've been paid, this isn't worth growing a beard for, but I do think that this pair is still looking pretty solid to the upside towards 110.45. What else did I take some profit on? I took some partial profits on dollar Swiss. And I'm looking for this one to continue to run. I really hope that we get a pullback on this one. So nice little break to the upside. Let's see if we can get a pause on dollar Swiss this week and another nudge to the upside to 93.50. That's a nice, safe pocket level for me to take some profit. If it goes up any higher, that's fine. I will probably still maintain an overall bullish position on dollar Swiss. I would love to see it get all the way back to this pocket way up here towards 1.00. In order to get there, though, we probably have to first come to 93.50. And if we pull back, that's fine. But I'm looking to see, is this a bottoming formation? Is this a pattern that can give us a move to the upside? I think for the bulls to maintain control, the dollar Swiss has to close above 93.50, close really above 9400 to kind of, you know, use this low, and then close back above that so we can show that this bottoming formation is support. But first things first, built up some positions in this area, added to some positions with buy stops. 93.50 looks fantastic on that dollar Swiss to the upside. So that's another one I'm looking to take some profit on. Hopefully this week, if we have any pullbacks, I do have some buy limits ready to buy some dips and retracements. I'm still going to look for that push into 93.50 for some additional profits. So dollar krone paid out, dollar Swiss partials, Aussie CAD, Aussie dollar. That was pretty solid. A nice little gain for the week. Ended up closing the week with, you know, dollar krone aside because that was, you know, thousands of pips between all the positions I was holding on Aussie dollar, Aussie CAD. I ended up closing out for over 3,000 pips last week. So that was a nice way to rake in the week, kick off the Traders Summit, and go into the weekend with peace of mind, lots of margin coming back, good profits. Took a nice little withdrawal from my account, so always love it when I can do that. And we approach this week with a clean slate, so let's see what's out there. Okay, let's take a look at the SPY and the Qs really quickly. The SPY is, as I'm speaking, slightly higher. We're opening higher in the U.S. It's about 45 minutes into the open. 1.65 on the Dow, 1.49 on the S&P, 1.47 on the NASDAQ. We gapped higher this morning. Gold is off the lows. We'll take a look at gold. Oil is still hanging out at $40. Futures market is positive today. Okay, so here is the SPY, and we are making our way back. Now, what's going to be interesting is how do we close up this quarter, right? A couple days from now is September 30th, and we'll see how this quarter wraps up. Like I said, we are actually in from the high of the year to the low of the year. This is where February's high was, the low of the year, the recent high. We're sitting here essentially for the year flat on the S&P. So going into this, you know, the 1 month prior to the election, are we flat? Are we negative? Are we positive? If the market's trying to price in who wins the presidential election, I think the direction that we see this week in the stock market might also tie into how the debate goes on Tuesday night, right? So we could be ready for a lot more volatility. There, of course, is, you know, enough of a dip here that maybe the market wants to have some little rally going into the election, and we just sit here in this indecision zone. And then a Trump win means bullish, a Biden win means bearish, just for the reaction. But just be ready. I think if anything, we have to be ready, we have to be flexible, and we have to be agile with our strategies. Volatility is going to be great if we have day-to-day trading ranges that are picking up, whether it's in the futures market, whether it's in stocks. I'm certainly going to be looking at some stocks to buy some lows and buy some good opportunities. But in Forex, looking for more day trading opportunities, looking to see if we can get, from these 50, 60 pip daily trading ranges to 100 plus. For pound pairs, look for, 150 plus pips a day. Those are really simple breakout strategies for intraday trading. I don't oftentimes like to day trade, but when volatility is extremely high, it becomes a pretty nice way to pack away some safe profits for the week and not have a ton of exposure. So that would be my plan with higher volatility. Speaking of volatility, let's take a look at the Qs really quickly, and then I want to go into the VIXY, which I did buy some calls on, I believe, last week in my trading room, or the week before that. I have some of the exercise some calls that are the November 20th expiration, and I'm looking to see where I can take those towards the election and onwards. I'm just really planning on the VIXY being above 20 bucks. And we'll take a look at that in just a second. So here's our little sell-off in the Qs. This is the NASDAQ ETF. So where are we? We gapped higher, but it'll be interesting to see, are we gapping higher to sell the rally, right? Are we gapping higher to come back and retest the high again? Is this going to be a stopping point where this is sell-off? Okay, small pullback, sell-off again, pull back one more time for a flat pattern, and then we go to the downside. From the technical standpoint, the market still is this. This is still what I see as the larger pattern. I know that it may not be this easy to trade, but we have had this high to this low several times over here. We had this high to this low, this high to this low. This is a broadening formation. So this was our COVID drop in March. This was our rally to the upside. Now we have fallen a little bit off those highs. Now the question is it going to be, one more to the upside with more divergence? Or is it a dead cat bounce where it's a lower high and we fall more? But this is where we should see price be able to go. Now, whether we get there or not, we don't know. But if we do get there, there's a ton of structure telling us that we can buy it. All right. But I'm, until I get these amazing opportunities, I am picking and choosing my stocks. I'm picking and choosing my indices. I'm picking and choosing my battles in Forex to make sure that, this could be a very aggressive risk off move to the downside, which risk off in stocks means it's going to be fast. It's going to be quick. It's going to be aggressive. It might be irrational. And Forex is going to be the same thing. Could be dollar strength, yen strength, Swiss franc strength. If you want a lesson on risk off, go back into February and March in the Forex market and see how the Japanese yen behaved. See how the dollar behaved. See how the Swiss behaved. That type of movement is what is oftentimes reflected in a risk-off environment. So what we've seen in risk-on is just this slow drift, consistent drift, nothing really derailing some of these risk-on currency pairs. So the broadening formation is still alive and well. That's the technical pattern that I'm looking for. It's going to take a kind of a perfect storm of catalysts to drive it lower. And so what I'm looking for, what I'm planning for, this is what I've been very vocal about, is the VIXY being off of these lows. So here is the VIXY, and we're sitting around, take a look at current price. So current price is 20.83. And I've got, like I said, I've exercised some call options that I'm looking at the $20 strike price. And I just want to see, can we be off these lows? I will make money and collect everything I possibly can if we're off the lows and above 20 bucks. All right. Now I will own this if I have to at 20 bucks, and I'm still long on this ETF around $22 with also pending buys around $15 and $11. But I'm looking for the VIXY to be up, whether we get back into the $35 to $40 area. That is where I'm looking to. If it's actually running here prior to expiration, those call options for me are going to be very valuable, let alone my ETF position that I have. So between the VIXY, the VXX, I am long on these instruments to make some money here in the next couple of months. Hopefully you'll see a nice spike. If for whatever reason it is suppressed and we come back down to these lows again, that is totally fine. I will just hang on to these positions and look for this to bounce. We had it bounced. Obviously that run in March was ridiculous. But I think that going into the election, the market's going to be, heightening that uncertainty, and it should be reflected in volatility. So watching the VIX, I'm trading the VIXY, trading the VXX, and looking for this to be higher. Okay, currency pairs for this week. I want to keep this weekly outlook pretty straightforward and pretty simple. Pound pairs. I mean, the pound has been doing everything that I expected it to do, which was, look, I want to see some volatility in the pound crosses. We are getting it. Look at what this did. We had this aggressive sell-off in the pound to do what? Bottom out and completely go back and balance. So I've been encouraging traders, if you're looking at this to trade intraday, it's been a really simple breakout pattern. So let me go into the 1-hour chart. And for the last several trading days going into last week, when this thing broke above out of this indecision level, we had a breakout around 178.50. It was an easy way just to buy the London breakout. So let's go into today's candle. We had a chance to make some money as well. This is 2 a.m. This is 3 a.m. That's 2 a.m. right there. And here's the 3 a.m. candle. So there's the 3 a.m. candle. That's the London session open. It pushes to the upside. If traders were long on that breakout, there was a chance to run. That's over 100 pips. Over 100 pips on a breakout on pound Aussie. Pound CAD. The one thing I like about the pound pairs is when it's all pound strength or all pound weakness, they all move really, really nicely. So here is, I believe this is going to be the 3 o'clock candle. Yep, that's 3 a.m. to 4 a.m. So there's your London session open, and you can see that aggressive breakout right at the very beginning. So just you're essentially straddling that candle looking for 5-minute price to break out, and there it is. That's 124 pips to the upside. So I had some traders already email me and send me messages like easy London session, easy breakout, and I love it. So make sure you take those profits. And, we'll, of course, watch the pound pairs this week. But I'm going to be short-term trading the pound crosses. I hope for the sake of a position, I would like to see the pound Swiss put in more of a low. I'd like to see the euro pound put in more of a high. It's going to be interesting to see what this pound Swiss does. If we hold this low and get back up to this high, if we break this resistance, this pound Swiss should be going up towards 2,700. We have really nice support back here, past resistance, and nice pockets around 26, 2,700. I think pound Swiss has room to continue to run. So I'm looking to stay long on this pound Swiss. I'm looking to stay long on the pound in general. But, I think a good play is pound Aussie, because if it's a weaker environment for the Aussie, the pound's going to benefit from that. If we have risk on trading, it's going to be pound Swiss to the north. We will have a slower mover, but the euro pound should be tracking to the downside. So I like pound Swiss long, at least back up into this level around 2,200. If it breaks above 22, I will remain long into this 26 and 2,700 area. Okay. Pound Aussie, if we come off those lows, I'm looking for pound Aussie to get back up through 8,400. And if we can break through 8,400, which is not that far away, this is what I'm looking for. If we can get through 8,400, then we're looking for a run into 9,000. So just past support resistance, room to run, a nice little reversal pattern in here if we can get it, but I think it's critical that the pound Aussie pokes its head above 8,400. So I'll be watching the pound pairs this week in my trading room. Some other currency pairs that I'm looking for, I want to see if we get some additional selling off in the Aussie CAD, Aussie dollar, the dollar Swiss to the upside, which means the euro dollar to the downside. Let's take a look at euro dollar really quickly. Euro dollar did a pretty good job of breaking the structure finally right in here, right? We break the structure. There's our high, low. If it pauses here, slides a little bit lower, I'm looking for the euro dollar to find this 1,500 level. So my short on euro dollar is right there going towards those lows. And one more pair that I'm watching pretty closely. I didn't enjoy this trade. I didn't get in this trade. I was in the dollar krone, and that was a fantastic trade. The dollar krone ended up going up from where we ended up getting long, letting some robots do some trading for us. This was a run for about 8,300 pips. The peso ended up moving close to 18,000 pips. Actually, it might have been more of that from low to high. Let me check. So from low to high, the peso went 18,500 pips. Now, here's what I'm looking for. I want to see if this peso can get back into this area here. Let me take a different color. Okay, let's see if the peso can work its way up into this area, all this resistance, all this structure, and see if I can look for some sell opportunities right here. Now, I would say this. If I'm going to sell the dollar peso, I want to sell it with a stop area above. Okay, this is a notoriously volatile currency pair. In and around the election, certainly it has some chances to be very volatile. So I will be careful. But I will say, based on the structure, we still have lots of inefficiencies down here. We're sitting near, the highest highs we've seen on the peso. If we see some risk on trading and a weaker dollar, then this is a great trade to get back into these levels, possibly back into these lower lows. So if I have a chance to sell the peso right here, which is around kind of around like 23.5, if somehow it comes all the way back up here to the highs at 25, but it does so with these monster pockets and monster inefficiencies, I'm looking to sell it. I'm looking to sell it. This isn't going to be a position trade. This isn't like scaling into the peso. This will be, I'm looking for rejection, stop area above. If it works out, I get paid. If it doesn't work out, I stop out and I wait. Okay. Now, the flip side of that is you could be long the peso and say, look, if we get any pullback right here, we can be long the dollar peso until we get up to this area. And that's totally fine because this does look like it still has one more push in it. So look for some indecision, look for another nudge to the upside, and there'll be another maybe 5,000 to 6,000 pips to the upside on the peso. But if I was taking this long, I would be very aggressive on moving stop losses to break even or better and trapping those profits into these resistance zones. So I'll be watching the peso this week. I think there's some good selling structure on it. Euro dollar, dollar Swiss, Aussie dollar, still kind of the usual suspects. But fortunately, getting paid like we did last week was great. Lots of traders, lots of pips. So that was excellent. And then, watching the indices. I'm going to watch the SPY, the NASDAQ. Let's see where we're at. I did take some small positions. I added more shares into Apple, Amazon. I'm willing to build a position on big tech, which I'm super patient on. I realize that big tech is completely potentially overvalued and there's so much concentration that it deserves to get beat up a little bit. But I'm also going to be willing to buy those great companies at some pretty good bargain prices. And then elsewhere, I'm going to be looking at certain sectors this week to try to find some trades. And what do I have coming up? So Trader Summit this week was awesome. This next week, this will be a full week of trading, Tuesday, Wednesday, Thursday in the Flex Trading Room. I also have a high octane Q4 kickoff event that's coming up on October 5th. So never a dull moment. A couple of things. Let's take a look at gold, silver, and oil, and then I'll let you go. We are sitting here at 1870 on gold, and I hope there's more downside. We still have this breakout level, which puts us around 1815. I'd say, and I've been telling traders this the last couple of weeks, between 1815 and 1750. Those are my breakout levels. So I'm looking for support around 1800, 1750. If you don't want to just, level yourself in, you can also just draw a trend line and say, you know what, I'll just wait for gold to break this trend line. So that gives it room to push, pause a little bit longer, maybe push down again, pause a little bit longer, maybe push down again. We have a ton of trend line support where you can see my mouse moving. Once we get on the right-hand side of this area, gold should have some pretty decent support. I am looking also to buy silver, so XAG, and I'm looking to buy SLV as an ETF. So silver is, just pausing a little bit. We still have some breakout levels down into the $19, 1950, 1970 area. So let's see if silver with a push, little pause or pullback and push down again, find some of these pockets, aggressive trend lines, looking for some right side confirmation, and I'll be long on silver again, hopefully at better levels. So I chose SLV as one of the instruments that I'm going to trade. So SLV right there. And I have a limit buy at 20 bucks. So it is currently trading at 2167. Okay, 2167 is current price. We have lots of island gaps here between lows around 20 bucks and this area around $19. So if we can fill this gap, then that means my $20 level gets filled right there. So that's kind of target one to start looking to buy. If it falls any lower, some nice structure here around $15.50. And of course, our March lows are around $12 and change. So, share area number one for me, number two, number three, and look to build a base position on SLV, take it back to these highs and try to, essentially turn this into like an 80-90% return overall if it gets back to those highs. So that's SLV. So we'll be watching commodities. We'll be watching everything just like we always do. It's stocks, it's Forex, crypto. Speaking of cryptos, BTC, and then we'll go. Bitcoin is hanging out at $10,900. Is there room to the downside? Maybe, but we'd have to break this level. This is around $9,800 right here. If the bears break 98, then it makes it a little bit more interesting to the downside. I will just say this. If we just wait for a trendline break. Okay, now, trendline break is one thing if we are falling down. If we're falling down, I definitely want to wait for a trendline break before I start buying Bitcoin again. Otherwise, we just have to find a way to recapture these highs. So we've talked about some potential range trading on Bitcoin, which we are seeing, but the posture is really solid. I mean, Bitcoin has a nice bullish pattern, Ethereum, Litecoin, Ripple, they all have really nice looking bullish patterns, whether they're head and shoulders or crown patterns. So we really just need to see probably risk on, okay, or risk appetite. We also need to see a softer dollar. I think that will also lead to higher crypto movements. Okay, and then US dollar, just to see where we're at. Is there room to the downside on the dollar? Of course. Could this be a near-term rally? Sure, right there. If the dollar rallies in the near term, if we see the dollar index hitting that, that should be 93.50 on dollar Swiss. That should be close to 1500 on euro dollar. If we see the dollar getting any stronger than that, between this area and this area, this is where I'd say take your profit as a dollar bull and look for some dollar bearishness. Okay, we have tons of resistance over here. This could be just a necessary correction. It's fallen too far too fast. Tons of resistance here on the right-hand side to start shorting that dollar again, which means we could have some really nice positions coming where, yes, the dollar recovery pays us in the near term, but the dollar weakness can pay us even more in the medium term. So continuing to watch that unfold. Okay. If you have any questions, let me know. Like I said, thanks for watching. Subscribe to the YouTube channel. Please hit that like button, share this video, send it out to your friends, trading communities, anybody out there that can benefit from free financial education, share it. Okay, so YouTube, type in my name, follow me on Instagram, Twitter, Facebook. You need to contact me, you can. Let's have a great week. Looking forward to trading with everybody. Round one. Ding, ding, ding. Here we go. It's going to be a train wreck. Let's see what happens. All right, traders, looking forward to trading with everybody this week. Take care. Pulver out. See ya.